What are the 4 pieces of money needed to buy a home? That is today's topic. So this video I'm doing right now, it's how much money do I need? That's the $1 million question that every single person buying a home always asks. Here's the 3 biggest questions I get when someone's buying a home. What's the rate? How much money do I need? And what's the payment? And of course, the payment's the most important thing because that's what you make. You make monthly payments. You don't write your checks out. You don't do auto pays based on interest rates, even though of course you want the lowest rate, the lowest payment, the lowest fees, the lowest everything. When it comes to how much money you need as a home buyer, I always tell people there are 4 pieces of money that you have to pay attention to. When you're watching this at home, make sure you're writing this down. So when this video is over, besides watching it again, sharing it with your friends, liking, commenting, and subscribing to my YouTube page, you're gonna look back over the material so you know exactly what you're dealing with. And of course, give me a call if you have questions on it further, or you need to get pre-approved yourself. But piece number 1. So when it comes to money, there's 4 pieces of money you need when you're buying a home. Number 1 is the down payment. So the down payment is your down payment, okay? It comes in different forms. As an example, let's say you were going VA, or let's say you were going USDA. Those are 0 down payment programs. Now, can you go VA and put down $100,000? Yes. I've had veterans put money down. They don't necessarily have to. Now realize what I said. I didn't say they don't have to. Not every veteran qualifies at 0 down, but it is a 0 down program. But number 1 is the down payment. Let's pretend you're going FHA. Minimum down payment with over a 580 credit score is 3.5% of the purchase price. And there's always a couple strings in there we could throw out there, but 3.5% down, okay? Conventional, 3%, 5%, 20%. Whatever the dollar figure is based on the minimum, you have to meet that. That's number 1, the down payments. Number 2, closing costs are lender fees, title fees, any state-specific fees. Those are all of the fees needed to close your transaction, to close your loan. If you talk to a loan officer who knows what they're doing, they will be able to at least estimate upfront what those fees are. Let's go to number 3. I say this, so put number 3 and then put letter A, parenthesis, put home inspection. By letter B, write down home appraisal. By letter C, write down 1 year of homeowner's insurance, okay? Home inspections, let's start with that one. They're not required for mortgage loans, but they're ridiculously and highly recommended, okay? You don't have to get one, but you should get one. That's a home inspection. Of course, depending on what they are doing for the inspection, that's gonna adjust the fee there. The loan officer or your real estate agent or whomever you talk to for the inspection will let you know that cost. Letter B, the home appraisal, okay? The appraisal is needed for the mortgage loan. And of course, letter C in number 3 is 1 year of homeowner's insurance. You need to prepay for 1 year of homeowner's insurance typically. About 99% of the time you do. Not always, there's certain situations you don't, but typically you do, okay? 1 year of homeowner's insurance. That set of things is the 3rd thing you need. The 4th and last thing that you need, prepaid items, okay? I even hate the term, I've gotten so used to saying it. Prepaid items, these are your escrows. Money that we have to put into an account to pay future taxes and insurance and bills like that. Prepaid items, it is money used to pay future bills, okay? Specifically property tax bills and homeowners insurance bills. Now, again, talking to a loan officer who knows how the property tax setups are done in your state, they can explain how much money you need to open that escrow account. So let's break this down one last time before I wrap this video up, okay? 4 things, 4 pieces of money. Number 1 is the down payment. Number 2 are the closing costs. Number 3 is broken down into inspection, appraisal, insurance. Number 4, escrows. Escrows, the escrow account is money we put into an account to pay future bills. Those are the 4 pieces of money that you need when you're buying a house. And the best thing about it, it doesn't matter who you're using for the loan or whatever. Those are the same 4 every single time. You just have to talk to the right person, the right loan officer, the right lender who can break those down properly. And until next time, make sure you subscribe to my page. We'll be talking later.